Most new investors think that there are only two ways to make money from stocks. Either the stocks goes up and you buy low, sell high, or the company pays you a dividend. But what if I told you that there was a third way? And that third way is what this channel is built around. You can get paid before you even buy the stock. You can get paid whilst you already own that stock. That's what options allow you to do. Not in a gambling way, not in a way, let's throw money at a random ticker and hope for the best way, but around stocks you already want to buy. Stocks you have already done the work on. Stocks that you've already done your due diligence and earned the conviction in. Stocks where you know the price you would be happy to buy, and you also know the price that you would be happy to sell. That's the bit that I think most people are never really taught. We're loosely given an idea of how to save, of how to invest. They told us to wait 20, 30 years. And don't get me wrong, compounding is the end game. And I agree with long-term investing wholly. That is, as I say, the end game. But what if your capital could also produce income whilst you're waiting? That's the part that I'm interested in. Here at OptionsBrit, the system is very simple. I use options account as an income engine. That might be my Robinhood GIA, general investing account, or my Tasty Trade options account. That's where I'm selling my options. That's where I'm collecting the premium. Then that premium gets moved across into my ISA, where I buy stocks I want to hold long term to gain from the capital appreciation. So the GIA earns, the ISA owns. That is the system. And today, before I even look at any new trades, I want to show you what I'm doing with last week's premium, because collecting premium is not the finish line. Premium's the fuel. So today, we're going to do three things. First, I'm going to show you where last week's income goes. Then we're going to look at ZETA, SOFI. Then we're going to check out the live options premiums and see if the market is actually willing to pay us enough to take on the risk, because premium is only good if the decision is good. Most traders lose money. I'm one of them sometimes. I'm not your financial advisor, and this is not financial advice. We learn the how here, but the why is always yours to decide. Capital is always at risk. Right, let's get to the screens. Quick reset if you are new here and wondering what is going on. This channel is not just about trading options for the sake of trading options. The goal is not to just sit here clicking buttons, pretending we're Wall Street. The goal is to use options income to fund tax-free investing. For me in the UK, that tax-free wrapper is the stocks and shares ISA. For the US viewers, you'll be looking at your Roth IRA. Different wrapper, same idea. The options trades happen outside of the wrapper. That's important to understand. The long-term shares live inside the wrapper, because inside the GIA, I'm not emotionally attached to those shares. The GIA is the income machine, remember. If the shares do get called away in there, that's not a disaster for me. That can actually be the win, because remember, I've collected the premium. I've realized the stock appreciation because I've sold above what I've bought it for. Then I can reset and just look for the next trade. The long-term conviction holding happens in the ISA account. That is where I want the wealth to compound. The GIA earns, the ISA owns. Before we look at the new trades this week, this is a bit I think most people skip. They talk about how you make the income, premium that they've collected. They talk about the weekly returns, but the real question is this: what do you actually do with the money? Because if the premium just sits there, it doesn't become the system. The system only really works when that premium gets a job. And for me, the job is simple: buy long-term assets inside my ISA. Last week, ZETA paid me $299. That was from covered calls and cash secured puts. And today, I want to take that premium and use it to buy more ZETA inside the ISA. So here we are over at the Robinhood ISA account. This is the whole point. The options account creates the income, the ISA builds the wealth. I keep drumming it through, but it's really important to understand. So when I say stocks can pay me, this is what I mean. Not magic, not free money. Risk is obviously involved. But if the trades work, the premium can buy more of the very assets I want to hold long term. I've already got this set up ready to go. Obviously, we're buying in Great British pounds. So the conversion rate works out to be roughly £221. And you will see down here it goes to 298.80 of ZETA. So we can buy that. That is our premium from last week that you saw on the original home screen. We're going to use that premium now to buy ZETA live so you can see exactly where that premium's going. So here it is. We've got 15, just under 16 shares we're going to be able to purchase at an average price of $18.43. The amount to invest here will be $293.19. The exchange rate is displayed here, and the total cost in GBP will be here. Now, the reason that it's not quite the 299 is for this reason down the bottom. Robinhood, when you trade in the UK, they require a 5% buffer in the stocks and shares ISA to account for market fluctuations and FX fees. It's pretty standard, but yeah, it's unfortunately something that we have to deal with, just another fee. This is how Robinhood make their money. So let's execute this trade and get this done. And there it is. So you can see that we have now made that purchase, and that is now sitting nicely in our tax wrapper, compounding as ZETA climbs. We will make money. The tax man can't touch it. It's worked perfectly. Because we've now turned option premium into ownership, that's the loop. Premium becomes the ownership. Ownership builds the wealth. And then the income account goes back to work. So now the question becomes this: can we do it again this week? Let's find out. The reason I always start with ZETA is simple. This is my highest conviction stock at the moment. But conviction does not mean I sell options anywhere, willy-nilly. That is where people get themselves into trouble. They like the company, so they get lazy with the price. And that's not the game. The first question is not how much premium can I get? The first question is, where would I actually be happy owning more shares? Looking at my ZETA chart, the way that I operate is that I have 3 zones. I have the green zone, which is generally where I would be looking to sell my covered calls. Obviously, these zones will move with price fluctuation as well. So this is my covered call zone. I've got my buy zone in the orange here, and I've got my seller limb zone to buy down in the bottom here. So get down into the red, we're going all in. But orange is my general area. So this is normally where I would look to sell my cash secure puts. So if we have a look today, we can see that ZETA is 0.7% down at the moment, trading around about $18.50. We are just looking like we're possibly likely to break in to the covered call zone. It's tried, it's rejected, and it's come all the way back down here, as you can see, to the 200-day moving average, which is that purple line, and it's bounced off it lovely, which is a great sign. So I think if we're going to be looking to do ZETA cash secure puts today, we will probably go somewhere around that 200 moving average lines. I think 18s would probably be okay today for me, to be honest. It's just above the buy zone, but remember, we're getting paid premium as well. So hopefully that premium would make up the difference, and it would effectively give us a break even of around about the 1770 mark. And after reflecting on the position this week, tonight is the night that Palantir will be producing their earnings, and I have a feeling that it could make or break the market. Palantir could quite easily tank the market. It could pump the market. But remember, fundamentally here, we don't like gambling. So the safe thing to do, especially at those premiums, is probably to stay away from it for this week. So let's move on and have a look now at SOFI. Charts on SOFI, same principle applied. We've got our covered call zone up here, we've got our buy zone in the center, and we've got our seller limb zone. What you can actually see with SOFI is it's below our buy zone already. So we're in a pretty good area where we know that we're pretty happy to buy it. It's trading at 1630. So what I'm thinking with SOFI is to play a 1650 and go for an in-the-money cash secured put. This should get us better premium, and it's still within our risk tolerance. Right, back in the SOFI charts, here we are. We can see that we're trading at the 1633 mark at the minute. Now, normally we would be looking at the one below, but it's only $25.16. We've already established that 1650 is well within our comfort zone of where we're happy to buy. So we're going to today sell 2 cash secured puts, 1650, in the money cash secured puts. We're then going to wait the week out and see if SOFI manages to get above that 1650. We will walk away with the entire premium and not have to buy those shares. However, if SOFI dips or it stays below it, we will be buying those shares and it will be executed. We will end up with 200 shares of SOFI. But as we've already discussed, if that's the worst outcome, we're okay with that because it's a stock that we want to buy anyway, and it's a price that we're happy to pay for it. We're just getting paid to go shopping, as we've already said. Let's click the 1650 sell here. and we'll sell the cash secured put at 16.50. Take a look at the box that pops up. We've got the 8th of May, which is Friday at 16.50. We've got one contract, but we want to up that to 2 contracts. That means that we will walk away with 96.92 in credit after fees and things have come out of it. Our collateral required will be $3,300 again. So if we go ahead and see if we can get this executed, what we might try and do is see if we can get it executed at 50. That didn't get accepted. We're going to try again at the 49 and see if we can get this one filled. Hang on. And there we go. We're filled. We've got our 2 put contracts now. You can see down here, we've been filled. The order's been filled. Our P&L up here. We're happy with that. We're all good. With regards to the ZETA position, we won't be selling the covered calls today on our ZETA Tasty trade. What I'm more inclined to do on that one is to wait and see the outcome of the Palantir earnings this evening, and then I will potentially pop on tomorrow to sell those covered calls depending on where that sort of sits after open tomorrow. But what I'll do is when we come back to the Funded Fridays episode, I'll update you on what we decided to do on that one, and you'll be able to see the outcome anyway, because it will be there live in front of you on Friday. So that's the decision made on this one. And I want to explain this properly because there's a real lesson today. I came into this episode expecting ZETA to be the main trade again. But after looking at the premiums, looking at the chart and looking at what is happening tonight with Palantir earnings, I'm going to be leaving ZETA alone today. And that might sound boring, but boring is fine, remember. ZETA is still my highest conviction stock. That's not changed, but conviction does not mean I have to force the trade every Monday, especially when the premiums are not paying me enough to warrant the risk that we're taking. Palantir reports earnings tonight. That matters because Palantir is a big name in the software and AI space. It's that casual volatility across SaaS or AI-related names. ZETA could easily get dragged around with that sector tomorrow. So for me, there is no need to rush. No trade is better than a forced trade. I would rather wait 24 hours, see how the market reacts, make a cleaner decision tomorrow than sell a ZETA contract today just because I wanted something to talk about on camera. That's how people get themselves into trouble with options. They decide they want income first and then they go out hunting for a trade just to justify it. I want to do it the other way around. Good decisions first, premium second. So today, ZETA's on pause. Not because I'm bearish, not because any conviction has been lost, because it has not. Just because the risk and the premium do not line up for me personally today. And hopefully that's came across to you as well. Now, SOFI is a little bit different this week. SOFI is already sitting in between my orange buy zone and the red seller limb to buy zone. That means we're already in the area where I'm interested in owning more. So when we looked at this option chain and saw the in the money cash secured put, that made more sense to me. Let me explain that in normal English. Selling an in the money put means the strike price is above the current share price. I'm kind of already losing. So there's a higher chance that I could be assigned. But I'm not scared of that here because the strike reflects a price that I'm already happy to buy at. That's the key. I'm not selling this because I think it can go wrong. I'm selling it because if it does go wrong, I know what I'm buying. I know the price I'm accepting and I know why I'm happy owning it there. That's the difference between gambling and having a plan. If SOFI stays below that strike and I do get assigned, fine. I own more SOFI at a price I'm happy with. Then I can move to the cover calls and just keep that wheel turning. If SOFI moves higher and the put loses value, fine again. I'll keep the premium and we'll do it all again next week. Either way, this is a decision that I can live with. And that's the real filter. Not which trade pays the most, not which ticker is the most exciting, which decision I can live with after I press submit. That's the sleep easy mode. This is why I took SOFI today and left ZETA alone. Premium is only good if the decision is good. Let's do a quick recap on what today's actually taught us. ZETA is still the main conviction stock, but I didn't want to force it today. SOFI gave me a setup that was within the buy zone. That is where the trade went today. And this is exactly why I wanted to record Market Monday live, because the point is not to pretend we know what we're going to do before we see the market. The point is to show the decision-making process. Sometimes we sell the trade that we expected to sell. Sometimes we have to walk away. Sometimes the better opportunity is elsewhere. Today, that was in SOFI. Friday is where we find out what happened. Did the SOFI put pay out? Did I get assigned? Did ZETA give us a better opportunity tomorrow? That's Funded Fridays. Market Monday is the plan. Funded Friday is the proof. Guys, if you like what you're seeing here, please do like and subscribe. But if not, that's okay too. And remember, here at OptionsBrit, we learn the how so we can afford the why. I'll see you next time. Take care. Bye for now.